discuss Chapter 4, Measuring the Outcome of Personal Insurance. As mentioned before in Chapter 3, the expression personal insurance means life insurance department, personal accident insurance department, and capitalization department. Today we are going to discuss the case for the life insurance department. The question is, why do we need to measure the outcome for the life insurance department? For two reasons. For calculating the tax obligation owed by the establishment in the favor of the public treasury. The second one is for providing information for profitability and financial position. The expression outcome means preparing the income statement at the end of the fiscal year. But in the case of insurance company, we don't call it income statement, we call it revenue and expense statement. As we know before, that income statement is either giving me net profit or net loss. But in the case of insurance company, we call it surplus or deficit. In the case of surplus, it means that revenue is more than expenses. In case of deficit, it means that expenses are more than revenue. Let's see how we prepare the revenue and expense statement. The following operations are made in a personal insurance company and capitalization between bracket life insurance department during the fiscal year ended in 30 of June, which are reinsuring over its operation at 30% for reinsurance companies. What does it mean 30%? As we said before in Chapter 3, that most of the companies are obligated to reinsure part of its operation as an outward reinsurance. In this case, this company is reinsuring 30% of its direct policies to outside. So, number one, the value of direct policies during the year is amounted 36,000. The company has collected 24,000 from them, and in-order premium of reinsurance company amounted 14,000. The company has collected 10,000 from these amounts. Direct damages, the expression damage as we mentioned before also means claims or compensation. Direct damages for the period are amounted 22,000, divided into the following: 6,000 to reduce premium, as we mentioned before. Reduction of a premium is considered as an expense, as a damage, as a claim, as a compensation. Also, the company paid 15,600 in cash to the insured person after deducting the following liabilities: 300 loans secured by insurance policy, 20 loans secured by insurance policy, late premium 76, and fines and late payment of premium for Egyptian pound. In-order insurance claims or damage amount 8,000. The company paid 80%. The company collected rate of 80% from the outward reinsurance damages. The opening technical provision include two items: mathematical reserve 3,200 and outstanding claim provision 2,000. Investment expenses during the year 70, production policy expenses 50 Egyptian pound, general and administration expense 240 Egyptian pounds. Real estate revenue 180, securities 200, interest on loans 360, of which the company collected 350. If you know the following: ending technical provision to be collected at the following: mathematical reserve 2,500, outstanding claim provision 2,160. Other provision to be collected in the form of provision for doubtful account 2% out of the loan amounted 1,800, provision for break-in securities 200 Egyptian pounds, provision of other investments 64 Egyptian pounds. Producer commission is calculated as 5% for the inward reinsurance commission, 8% for the outward reinsurance commission, 10% for the outward reinsurance commission. Required prepare the outcome for the life insurance department. As we said before, outcome means income statement or revenue and expense statement. The first step is to prepare your calculation before preparing the revenue and expense statement. The first and the most important part is how to calculate the revenue. As we mentioned before, revenue from the insurance company point of view is the premium. We have three different types of premium: inward premium, direct premium, and outward premium. According to the given, the company reinsure 30% of its direct premium. So the first step is to calculate the outward premium. So outward premium equal to direct premium multiply the reinsurance rate. So direct premium 36,000 multiplied the 30% rate gives us 10,800. How much the commission that the company should pay for the outward reinsurance? According to the given, the outward reinsurance is 5%, so direct premium 1,800 multiply the 5% gives me 1,800. Inward reinsurance commission, inward reinsurance multiply the commission rate. So according to the given, the inward premium 14,000 multiply the commission 8%, so it is equal to 1,120. The outward reinsurance commission is equal to the outward reinsurance premium as calculated in number 2, 10,800 multiply the commission rate, which is 10%, will give me 1,080. From the insurance company, there are different sources of revenue. The main source of revenue is the premium, but what about the other sources of income? According to the given, there are other sources of income represented in the late payment or the fine for the late payment, which is equal to 4 Egyptian pound. Also, income from investment is a source of revenue. According to the given, the company gained 180 from real estate, so I had to add 180 from the real estate, plus 200 securities income, plus 360 loan interest. But don't forget, there is 70 investment expenses. So the net income from investment equal to 740 income from investment minus 70 investment expenses. So the net revenue is 670. So we have calculated the revenue from the premium. We have calculated the revenue from other sources, which is the late or the fine from late payment, which is equal to 4 Egyptian pound. We have calculated the net income from investment, which is equal to 670. The next step is to calculate the net damage or the net claims or the net compensation. The same concept here, as we have direct premium, we have direct claim. As we have inward premium, we have inward claim. We have outward premium, we have outward claim. First of all, we need to calculate the direct damage or the direct claim. According to the equation, direct claim equal to the direct claim or damages paid in cash plus benefits deducted from the current account of the insured payment of damage plus the direct damages paid to the insured in non-punctuary form. So the direct damage is equal to 16,000. How did we get the 16,000? We actually paid 15,600 and 400 as a discounted from liabilities. We paid also 20 for interest of loan with security policy guarantee, 76 late premium, and the 4 delay interest. So the total of claims paid, direct claims paid, equal to 22,000 Egyptian pound. What about the inward reinsurance claims or inward damages? As mentioned, 88,000. The company actually paid 80%. So what is the actual inward damage paid? 8,000 multiplied 80% equal to 6,400. What about the third type of damage, which is the outward reinsurance damage? According to the equation, direct compensation multiply the reinsurance rate. So the direct compensation, the direct damage, 24,000 multiplied 30% equal to 7,200. So how much I'm going to pay? I'm going to pay 80% of the outward, so 7,280 multiply 80% equal to 5,760. The net damage is equal to the direct damage plus inward damage minus outward damage. So 22,000 plus 6,400 minus 5,760. So the net damage is 22,640. Provision for investment include the provision for doubtful loans. According to the given, it is equal to 2% of the loan. So 2% multiply 1,800 equal 36 Egyptian pound. provision for break-in securities equal 200, so the total provision for investment is 236. Don't forget we have provision for other investments equal to 64. Let's prepare our statement. You have to start with revenue. As we mentioned before, revenue or direct premium include direct plus inward minus outward. So according to the given, direct premium is 36,000 plus the inward reinsurance premium according to the given 14,000. The total premium is 50. The outward reinsurance premium is opposite to the total premium, so it should be deducted from the total premium. So 50,000 minus 10,800, the net premium is 39,200. What about the change in mathematical reserve? As mentioned before in chapter 3, mathematical reserve is considered as a part of revenue. According to the given, the opening or the beginning mathematical reserve is 3,200 Egyptian pound. The ending balance is 2,500. We subtract both numbers, so the ending mathematical reserve is 700. The ending mathematical reserve is considered as part of the premium, so we will add it to the net premium. So I'm going to add 39,200 plus 700. The earned premium is 39,900. What about the outward reinsurance commission? According to the given, the company paid outward reinsurance 1,080, so the net income collected from other investments 670, other direct revenue 4, so the total revenue gained from the life insurance department is 41,654. The second and the most important part in the revenue expense statement is expenses. As we mentioned before, expenses include claims, or we sometimes call it damages, or sometimes call it compensation. Compensation is divided into direct compensation, inward compensation, and outward compensation. Direct compensation is added to the inward compensation and then subtract outward compensation. According to the given, the paid or the direct damages 22,000, inward damages 6,400, so the total damages or the total compensation 28,400. Don't forget, I have to deduct the outward reinsurance claims, which is equal to 5,760, so 28,400 minus 5,760, the total paid damages will be 22,640. As we mentioned before in chapter 3, provision is part of the expenses or part of the claims, so I need to calculate the beginning provision and the ending provision. According to the given, the ending outstanding claims is 2,160. The opening outstanding claims is 2,000. So I'm going to subtract the ending from the opening. So 2,160 minus 2,000 will be added to the total damages paid. So the total damage payable is 22,800. What about the other expenses? As we mentioned before in chapter 3, expenses include the commission paid. We have 3 different types of commission: direct commission, inward commission, and cost of production. Direct commission is equal to 1,800, inward commission 1,120, cost of products 50. So the total commission and production cost is 2,970, will be added to the total damage payable, so it would give me 26,310. So, did the company suffer from surplus or deficit? According to the given, the company has surplus because the total revenue is more than the total expenses by how much? By 15,344. And thank you.